All right, guys, this is it. Last chapter. Can you believe it? I don't know about you, but I still feel like I'm limping towards the finish line. But anyway, this is the last chapter. It could be difficult and it could be easy depending on how you approach it. I think if you were to take good notes and write down the formulas, this chapter can be very easy. If you try to think about what's happening in this chapter, conceptualize the concepts and really digest things, it could be a little convoluted. So just keep in mind that there are kind of two goals with respect to the chapter. There is the formulaic approach, understanding the formulas and when to use them, and then understanding the concepts. You could be, you definitely want to be further along on the formulas, and that way you'll get through the chapters successfully. And for me personally, I didn't really appreciate what was happening in this chapter until years later after I was out of school and in the workforce. Okay, but we are dealing with cash, okay? Um, and again, if I think about it, if I start the year, figures I don't have my pen working. But if you think about, what happens if I start the year with 10 million in cash, all right? And then at the very end of the year, I have $1 left, right? Beginning cash 10 million, ending cash $1, right? The knee-jerk reaction might be to freak out that it was a terrible year. And the actuality is that we don't really know, right? Um, we need to understand, like, what did we use our cash on, right? So I'm going to Vegas next weekend, and if I were to have taken 10 million, went to Vegas and lost $9,999,000, and I came home with $1 left, that would be a terrible thing. However, if instead I had 10 million and I converted it to property, plant, and equipment, like I invested in assets that I intend to use to convert raw material into finished goods and make a product, then that is actually it could be a very good use of our cash. And so, like, just the idea that we lost or we went from 10 million to $1 doesn't necessarily mean it's a bad thing. And so we don't see that on the income statement. We don't really see it in the balance sheet. We will see the beginning and ending on the balance sheet, but we're not going to see the reasons why, at least not directly within the balance sheet. So this is the third financial statement, and it is one of the financial statements that investors really do pay attention to because everybody understands cash. Okay. So the goal of this chapter, we are going to talk about, there are three sections of the cash flow statement. There's basically three reasons or three activities that generate cash and use cash. And so we'll talk about that. In fact, we're going to talk about that in this episode in a moment. But then we're not going to deal with this. I'm not going to go through the asset ratio stuff. That's just not something I'm going to cover. We're definitely in future videos, we're going to talk about how we prepare the statement of cash flows. And when we think about the statement, there's really two formats, okay? There is the indirect method and then the direct method, okay? I'm not seeing determine cash flows, illustrate spreadsheet, cash flows from operating. Interesting. Well, there is a second approach, and it is the direct method, okay? And we're definitely going to cover a little bit of that. But the vast majority of stuff that we will talk about is the indirect method, okay? All right, so distinguish between operating, investing, and financing. These are the three sections associated with the cash flow statement, and I'm already feeling like I want to move away from the PowerPoint slides for just a second. But I think of the cash flow statement. I have beginning cash, right? Then I'm going to have cash provided or used from operating activities. Okay. Cash provided from operating activities. So that's the operating section. That is all the cash that I generate or use from running my business day to day, like the actual operating of the business, right? So if I'm selling t-shirts, this is the one of my new t-shirts from well, related to my book. Super excited. They just came in this morning, right? So if my business model was to sell t-shirts, which I do, um, in case you're interested. But anyway, short plug there. But if my business model was to sell t-shirts, then the cash that I generate from the sale of my t-shirts is what I would report in the cash provided from or used from operating activities. Okay. It's the cash that customers give me. And then it's the cash that I pay in order to like buy more t-shirts. Now, it's not the income statement because remember, the income statement, a kid can come into my office and say, "Hey, I really want a t-shirt." And I can give that kid a t-shirt and the kid can promise to pay me in return at some later date. So that would show up on the income statement as a sale, but it wouldn't show up on the statement of cash flows, at least under the operating activities, because a kid didn't give me any cash. And so the income statement and the cash provided from operations, two different things. One is accrual accounting, and the other one is just purely cash. How much cash do we receive? How much cash do we get? All right. And we're gonna go through that in great detail in a future video. The second section, it'll be cash provided or used from investing activities. All right. And so what we are really saying here is this equals all cash transactions related to long-term assets, right? So did I buy a machine? Did I buy a car? Did I buy land? Did I buy a building, right? Did I sell a car? Did I sell a land? Did I sell a machine for cash, right? So again, I can acquire a building. But if I were to acquire a building by borrowing money, then that wouldn't be a use of cash. If I acquired a building and paid cash for it, that would be cash used from investing activities. It is all the cash transactions related to the buy or sale of long-term assets. Then the third category is cash provided or used from financing activities. All right. And that is long term debt or equity, right? So did I borrow money from a bank? That would be that would be financing activities, cash provided from financing. Did I sell stock to investors? Did I sell stock for $50,000 in cash? Then that would be cash provided from financing activities, right? It is all the cash transactions related to buying and selling stock or borrowing money from a bank or paying money back to a bank. So I'm going to have the beginning balance, and then I'm going to have plus or minus cash provided from operations, plus or minus cash from investing, and then plus or minus cash from financing, and that will give me ending cash. and ending cash is what you see on the balance sheet, right? This is this chapter. So now I can go back. Um, I want to say that we covered all of that. We covered all of this. And not important. This is what we just covered. Cash provided from operating activities, etc., etc. These slides are actually pretty good, right? Again, this is the operating activities. So we have cash from sales to customers. That's what the kid came into my office to buy a t-shirt. I sold him a t-shirt for cash. Okay. It could be the case that kids previously purchased a t-shirt and didn't pay me for it at the time of purchase, but they came back to my office and they gave me cash from a previous sale, right? So that's what we mean by cash collected from credit sales. Again, it doesn't have to be in this period. It could be from 5 years ago. But if some kid came in and gave me $15 for a shirt that they purchased 15 years ago, that would be an increase to cash in this period. Okay. Then the kind of obscure things would be, hey, you know what? There could be, again, moving away from my simple t-shirt business, we could be a much bigger company and we could invest in other companies. And if we were to invest in other companies and they were going to give us dividend and we receive that dividend in cash, then that cash that I received would be treated as cash from operating activities. And then if I pay interest to anybody, if anybody pays me interest, then I'm also going to treat that as operating activities. And then I'm going to pay for my t-shirts, right? I'm going to have to pay taxes at some point. I have to pay interest if I pay employees to go out and sell t-shirts for me, right? If I pay the vendor that makes my t-shirts, but all of the uses of cash that I use to like run my business are going to be, uses of cash. We can consider this sources of cash and this to be uses of cash. But these are all of the types of transactions that are going to occur when we are talking about cash provided from operating activities. And again, just to repeat, investing has to do with long-term assets, right? So we could sell intangible assets. Like that's not the best example, right? But we could sell patents or trademarks or trade secrets. More likely to be the case is that we're going to sell a building or a car that we no longer need. Okay. We could sell some investments that we had, like if we own stock in some other business and we sold it for cash, we're going to want to show those as investing activities. We could purchase patents and trademarks and so forth. This isn't a great one, right? Cash outflows. This really isn't. I would almost get rid of that. But we can purchase land. We can purchase plant assets, right? We can purchase the stock for some other business, right? All of those things are long-term assets. And then finally, the financing section, right? We could reissue treasury stock. That's not the best example. We could just sell traditional stock in our own business, right? This is probably the most interesting one. And then we could borrow money from a bank, right? These are, this and this are probably the two most common situations. Are we really going to generate cash from the sale of treasury shares? Absolutely, but it's not as common. And then look, financing activities related to cash payments, like if we pay dividends, if we withdraw money from the business that goes to the owner, right? If I pay back a bank or if I purchase treasury stock, those are all uses of cash related to financing activity. And remember, financing is long-term debt and equity. Okay. This slide I hate. I don't want to use it. This slide I also don't like to use it. And so I want to cover one last thing. Okay. Before I jump into the next videos, I want to just kick us off the right way. So there's three sections, right? There's cash provided from operations, cash provided from investing, cash provided from financing. In addition to there being three sections, there are two formats, right? There are two acceptable ways to calculate cash, or at least to present it. You're going to come up with the same answer, right? It's always going to be beginning, ending, right? That's always going to be the same. Operations, that's going to be the same number. Investing and financing, right? I should say plus or minus, plus or minus, plus or minus. Okay, there are two ways that we can present this information. And again, both ways will give you the same information, the same overall conclusion, but it'll get there a different way. There is the first approach, which we are going to call the indirect approach, and then there is the direct approach. And the indirect approach, I'm not going to get into what it is, but it's going to be different, right? The statement of operations, the indirect approach is going to look different, but it's going to have the same conclusion. And then the direct approach, it's going to be a completely different way to come to the same conclusion. All right. But then once you move out of statement of operations and into investing and financing, they're both going to look exactly the same, right? So really, when I'm talking about the two different types of cash flow statements, the only real difference is here in the statement of operations. Okay. And so the first video that I'm going to go to next after this one is generating cash flow using the indirect method.